What was the relationship between the gold price and Fed policy this year? Was there even any direct relationship, or was everything just sort of correlation?
Absolutely. There was a chart that I prepared for our viewers today that really looks at how gold reacted over the entire year. And what we saw was a tremendous rise in gold prices up until March. March happens to be the first interest rate hike. And that was kind of like the nail in the coffin that set into motion a tremendous price correction in gold from March through September. In September, there was optimism that, the Fed has raised rates from near zero. They were at about 3.5% then. There was an optimism that pace would slow down. And so we saw gold begin to rise. And then some dovish comments came out during that period of time. And that's when we saw a tremendous spike off of the triple bottom that occurred at around 1621. So we've seen about a $200 per ounce increase since the lows of September, October till November. November the 3rd was the bottom historically when we look at a chart. And from there, it hit a high of 1837. And now it seems to have found support at the 200-day moving average, which is just below 1800, I believe around 1792 to 1800 has been a strong area of technical support.
And now looking ahead, before I get your final price outlook for gold, what would you say are the main forces driving your outlook for the gold price in 2023?
Well, the main thing that is driving my outlook, I created my actual forecast by using what's called a Fibonacci extension, looking at the last rally, then taking it to the correction of around 1620 and projecting upward. But fundamentally speaking, it is that at some point next year, the Federal Reserve will finish raising rates. They will maintain them at an elevated level for a period of time, but the consumer itself is not going to look at higher interest rates. They're going to look at elevated interest rates. And that's the key difference. Right now, and especially a couple of months ago, no one was certain as to where they would take interest rates to combat inflation. Realize back in 2010, it wasn't that bad. But if you look back to the 80s, which is that 40-year high, everybody compared inflation levels now to then because we had hit that high in June of over 9%. Back in the 80s, the end of the 80s, beginning of the 90s, you were looking at double digit, up to 16% in terms of interest rate and inflation. And that is unsustainable for any kind of a extended period. I think what my forecast is based upon, and most economic forecasts are based upon, is where will the Fed cease in raising rates to, and how long will they remain elevated? That's the key. And the fact is that we've seen an interesting disconnect, because prior to this year, higher inflation always moved gold up. There was really an immensely close correlation between inflation rising and gold rising. However, what we saw this year was that as inflation moved up at the beginning of the year, we knew that the Federal Reserve was going to react by raising interest rates, and that's an extremely bearish force on gold. So you had a push-pull between inflation going up and higher interest rates moving up. Now the belief is we're going to see an elevated level of interest rates, and we'll see inflationary pressures moving down. And that's what is the core of what many economists are looking at in terms of moving back to a period of normalization of what we have learned to expect.
So we should have rising real interest rates then, right? If rates go up or stay elevated and inflation trends down, that means the nominal minus the real the inflation rate, which is the real rate, should be trending higher. What does that mean for the gold price then, Gary? What's your end of year outlook? Yeah.
Well, my end of year outlook is extremely bullish for gold. I'm looking for gold to hit possibly 2250 to a high of maybe 2400. I definitely believe it's going to easily breach $2,000 without any question by the second
all-time
quarter.
Highs next year.
I'm looking for new all-time highs next year. Yes.